Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news markets are in full retreat following the latest set of US tariffs. But first, this week, eyes will be on central banks, especially those in our region. Markets are expecting policymakers in New Zealand, India and the Philippines to each cut rates, while in Australia, markets expect them to hold them after back-to-back cuts. All these moves are in either response or in preparation for faltering growth. All this comes after US jobs growth came in at a modest 164,000 in July, almost exactly as expected. But there was a sharp sting in this data. June's 224,000 gain was revised down to 193,000, and May's data was revised down lower too for a second time. The July result was one of the lowest monthly increases in the past 2 years. Separately, the US announced another 10% tariff on $300 billion worth of goods from China. The US also is about to tariff European aircraft. Wall Street wasn't impressed, especially with the US tariff moves, and it was down for a weekly drop of 3.3%. Bond yields keep on dropping too as risk aversion builds quickly over the trade policy misstep. European markets fell even more. Not only are they facing an unreliable US economy, they have their own slowdown to worry about, and the fear of Brexit as well. Most markets were down more than 3% on Friday. Yields fell sharply there too. In Asia, most markets shed 2.5% for the week, much of it on Friday. For trillion-dollar markets, these are huge losses in value. China is raising the stakes and the risks by announcing it will retaliate against the new US tariffs. And they said they won't now give an inch after what they see as a latest insult from the US negotiation style. One of the great ironies of all this trade war is that the US started it, and the trade deficit the US runs with China has gotten progressively worse. New June data is recording a record deficit with China. US exports are falling much faster than US imports. While all this is going on, Japan and South Korea are in their own trade tussle, rooted in deep cultural enmity. Now each has removed preferential tariffs, and that will roil trade between the two neighbours. It is a trade dispute that could get ugly fast. South Korea is launching a stimulus program to counter the expected impacts. The US Treasury 10-year yield is now at 1.84%, an eye-watering decline from this time last week of 23 basis points. Gold will open the week slightly lower at $1,440 an ounce, down $2 from Friday, but up $25 for the week. US oil prices are staying low despite a small bounce on Friday. They're now just on $55.50 a barrel. The Brent benchmark is at $61.50 a barrel. The Kiwi dollar starts the week little changed from Friday, but is a whole 1 cent lower than this time last week. It is now at 65.4 US cents. On the cross rates, we're a little firmer at 96.2 Aussie cents. Against the euro, we're down to 58.9 euro cents. That sets the trade weight index back to just on 70.8 and nearly 100 basis points lower than this time last week. And that's for the second week in a row. Just 2 weeks ago, the trade weight index was at 72.5. So this is a 2.5% overall depreciation for the Kiwi dollar. I'm David Chaston, and that was 90 at 9, brought to you by interest.co.nz.